You may want to pause and read the problem before listening to the rest of this video. This problem has us calculating dividends for the current year. We're told what lock, stock, and barrel's assets were at the beginning of the year, which is $200,000, and its liabilities were $120,000. So I've put this under the accounting equation, which is always recommended. When you get a lot of information in a word problem, it's good to organize it under your accounting equation columns. So I've set up the beginning balances, and then we're told at the end of this current year that its assets have grown to 220 and liabilities are now 130. So if you can see here, I've depicted that information. I hope you can see that shareholders' equity can be determined because we know the accounting equation has to balance. In other words, you take all of the assets, pay off your creditors, what's left is the owners. So we can calculate the beginning and ending shareholders' equity. The beginning was 80,000. Again, you're just taking your assets minus your liabilities to get shareholders' equity at the beginning of the year, and then we can do the same for the end of the year. Now that doesn't get us to our answer, but it gets us closer because I hope you realize that dividends is part of shareholders' equity. So we need to see what caused the change in shareholders' equity, and one piece of that is dividends. I encourage you to remember REDS as an easy way to keep in mind what affects the shareholders' equity. It's really these four categories. R is for revenues, E is for expense, D is for dividends, and S is for stock. So REDS explains what causes changes in shareholders' equity during the year. So given that, I'm going to expand this. I have the advantage of making space between my beginning and ending balance, and what I'm going to put here is the rest of the information that we're given. So the next piece we're given is that revenues were 100,000. So I'd put that under the shareholders' equity because I know that it went up by 100,000. I'm not sure what the other side to that entry is, but we can assume at this point cash. That's actually not necessary to determine our answer, but I don't like to put down one account, or let's say it this way, one number, and not keep us in balance. The other is that we're told expenses were 80. Again, I can assume cash. It's not necessary to make that assumption, but we'll go with that. And then we know that dividends make shareholders' equity go down like expenses do, but I don't know that amount, so I'm putting X. And lastly, REDS. The S of REDS is stock, and we're told that there was no new stock. So I hope you can start to see here that we have shareholders' equity where we actually have an equation and with only one unknown. So I'm going to take this and solve for it. I know it's vertical here. I solve better horizontally, so I'm going to take that shareholders' equity and solve for dividends by taking my beginning shareholders' equity plus my revenues minus my expenses, which is your net income, $20,000, minus my dividends plus no new stock has to equal my ending shareholders' equity. Solve for X by adding X to both sides. So you can see I've rearranged the formula, and I will get dividends of 10,000. I always recommend that after you've solved for your missing amount, plug it back in and make sure that it works. And you can see 80 plus the 20,000 of net income minus the 10 they didn't keep, that's a net of 10, equals 90.